Good afternoon and welcome to BizTech's Asian Midday Market Watch. Lee Kian Soon, CEO of Astral Asset Management, is our guest today. Now, Kian Soon, welcome to the show.
Good afternoon.
Now, Kian Soon, amid the turbulence and carnage in markets, we're going to come back to you a little bit on that. But we're going to start first at looking at some cryptocurrency numbers and then regional stock markets. Bitcoin is at 18,770. It's down 6.39%. Ethereum is at 1,283.74. It's down 7.04%. Looking across the regional equity markets, we've got the SGX, which is down 1.23%. KLSC is down 0.58%. Shanghai is down 0.91%. ASX All Ordinaries is down 0.8%. The Nikkei is down 2.07%. The Hang Seng is down 2.55%. And the Kospi is just a whisper under 3% down. It's at negative 2.98%. Kian Soon, what's the reason for this carnage in markets today?
I think since the Fed has announced the 75 basis interest rate hikes, as well as sending across a very hawkish message, the market has been in correction mode since around 10 days ago. And this has been continuing. What we witness here in Asia is no surprises, as there's always negative handovers day after day from the United States. So the market, in essence, the Asian markets have all been badly hit. Not to mention that the currency markets has also begun its wild swings.
And I want to talk about the currency market wild swings here. So we've got a wild swing, for example, on the pound, which is literally down 5%. Walk us through some of the key currencies that have experienced significant changes in value.
I think, again, the Fed has outlined a very hawkish projection. And in terms of interest rates hikes, as a result, you see the strengthening of the US dollar. And a lot of the central banks are, developed nations, emerging markets are just playing catch up because nobody has as aggressive, highlighted, their interest rates hikes as much as the Fed. You see that in a lot of the developed nations' currencies. And as a result, you could see that, as the US dollar strengthened, the other currencies have started to weaken. For the pound is something else, right? Amidst all this, market mayhem and turmoil, they announced a sudden budget, a mini budget, which, would enable them to have significant tax cuts. And that sent the pound, tumbling down as traders were not confident that, such a fiscal policy is actually the, in terms of best timing and also as well as in terms of execution, because United Kingdom is in a significant amount of debts. And they were wondering how, the market is wondering how the government is going to finance these debts with such a massive tax reductions.
So I want to talk about policy divergence with regard to currencies. And two countries stick out, China and Japan. Now, the yuan today is at its weakest in over 20 years. What are your thoughts on this? And do you see this policy stance weakening as perhaps their currencies weaken against the dollar?
I think the yuan is under immense pressure for a couple of reasons. First is, if you look at the interest rates of China, instead of hiking its interest rate, it's very likely, given its economic situation, China will continue to have certain form of interest rate reduction or at least keep it consistent. As a result, the currency faces a lot of pressure versus the US dollar. Secondly, the economy is displaying a significant slowdown, as we have seen from the facts and figures. And once you have economic slowdown, the import-exports numbers are coming down, you will expect yuan to face even more pressure going forward. I think what is interesting is what has the Chinese government done. And so far, I think they have done things more on the peripheral, i.e. Apart from propping up the currencies, they have also made it very difficult for traders to short the currencies. And this is possible because yuan is not exactly a open market, and they have actually tried to slow down the shorting of the yuan in order to cushion this slide. Japan is in a different situation whereby it always has been an zero interest rate environment or near zero, and the central banks have indicated that they will not increase interest rates at least for the near future, and this creates intense pressure on the currency because the as what we have discussed, the US dollar is rallying and the pressure on the Japanese yen is also very strong. And it's a challenging situation because I don't think Japan's economy could withstand any increase in interest rates. That would basically send its economy into a tailspin downhill.
Now, then, Kian Soon, what's left for Asian investors to do? What do we do with our money now?
I think it's interesting, and I got asked these questions many times, especially when times are not doing great for most asset classes. It's interesting, and my usual answer is, as an investors, Asian investors, you should be properly diversified. You should look at other asset classes. The bond markets as well as money markets are beginning to look interesting. T-bills are starting to, from a lot of governments are starting to deliver interest yield of more than 3%. Yeah. So that could be an interesting place for investors to park their money.
And I think really in a short, and I think we mentioned before the show when we were talking, really in a short-term basis because rates are in fact rising.
That's correct. One thing to highlight is in a rising interest rate environment, always look at short-term fixed income securities, bonds, or T-bills, because then you could ride on the rising interest rates. And I won't be surprised if a lot of the treasury cross the 4% to 5% mark in the near future.
Kian Soon, with that note, thank you very much for coming on the show.
You're most welcome.
Now, we've been speaking to Lee Kian Soon, CEO of Astral Asset Management in Singapore, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This show will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.